Welcome to Breaking News to Trading Moves.
Glad to be here for this one.
Yeah, so imagine paying $60 billion for a massive tech company, taking total ownership of their products and their customers, and not using a single dime of your actual cash to do it.
It sounds wild when you put it like that.
Right. But that is exactly the headline we are looking at. SpaceX has agreed to acquire Anysphere, which, for those of you following along, is the company behind the widely used Cursor AI coding platform, for $60 billion in an all-stock deal.
It is a remarkable transaction, especially, when you look at the mechanics of how they structured it following SpaceX's recent Nasdaq debut.
Exactly. And for those of you listening and managing your own portfolios, we like to get straight to the facts of a deal.
Right, to the numbers.
Always. So right now, Cursor has reached roughly $2.6 billion in annualized business-to-business revenue.
Which is massive for that space.
Yeah. And SpaceX plans to release an XAI model through the Cursor platform, while at the same time developing its own autonomous coding agent called Grok Build.
So they're moving fast.
Very fast. They expect this deal to close in the third quarter of 2026. Now, our mission for this conversation is very specific. We're going to break down the specific companies that emerge as potential winners and losers from this exact acquisition.
That's the plan.
We will look at the direct players, the hardware providers, the physical infrastructure builders, and finally, the competitors and service firms facing new pressure.
Right. We are moving logically from the software layer down to the physical concrete and copper wiring, and then zooming back out to the human labor market.
I like that framing.
Yeah, because every layer of that stack has a clear winner or loser based on this specific transaction.
So let's start with the direct software ecosystem. The most obvious winner is SpaceX, ticker SPCX.
Unquestionably.
They gain an established product, a massive trove of coding data, and a built-in enterprise customer base. My immediate thought is that this is like buying a fully operational revenue-generating factory instead of buying a vacant lot and hoping you can figure out how to lay the bricks.
That is a great way to look at it.
Yeah.
They entirely bypass the trial and error phase of product development.
Right. But I am genuinely curious about the financial mechanics here. I mean, they are using stock rather than cash for a $60 billion transaction.
Yes.
Does that give them a strategic advantage, especially since they just debuted on the Nasdaq and presumably have a ton of cash on hand?
Oh, absolutely. The stock component is arguably the most strategic lever they pulled here.
How so?
Well, when a company debuts on a public exchange, they typically raise a large pool of cash. But cash is always a finite resource, right?
Sure.
If you deploy $60 billion of cash into a single acquisition, you severely limit your working capital for your primary operations. And in SpaceX's case, that means manufacturing rockets, satellite deployment, aerospace research, all the heavy industry stuff.
Right. You need cash to pay your physical suppliers and your engineers.
Yeah.
You can't pay the steel guy in stock.
Precisely. By using their equity, SpaceX leverages the high valuation the public markets have placed on their newly listed stock.
I see.
They essentially use their market premium as a currency. This keeps their actual cash reserves untouched.
Which gives them breathing room.
Exactly. It allows them to fund the aggressive expansion of the XAI models and this new Grok Build project without taking on restrictive debt or, draining their IPO capital. They bought the launch pad, to use an analogy, without spending the fuel money.
That makes perfect sense for SpaceX. Now, we also need to talk about NVIDIA, ticker NVDA, and Alphabet, ticker GOOGL.
Yes, the early backers.
Right. Both of these companies were early investors in Anysphere. Aside from any immediate financial return they get on that initial investment, this deal validates the entire category of AI coding platforms.
It really does.
As Cursor and XAI scale up under SpaceX, we are looking at increased demand for NVIDIA accelerators and Google Cloud capacity, right?
Yes, because software cannot exist in a vacuum.
True.
Think about what an AI coding platform actually does. When you ask a tool like Cursor to build a feature, it doesn't just type out a few lines of text.
No, it's doing a lot of heavy lifting.
It has to ingest millions of lines of existing code, predict the next logical sequence, ensure it doesn't break any surrounding architecture, and generate complex functions in real time.
Which takes power.
That process requires vast, almost incomprehensible amounts of processing power.
And when a $60 billion acquisition happens in this specific niche, it sends a blaring alarm to every other enterprise out there.
It really is a wake-up call.
It says AI coding is no longer an experimental toy. It is a mandatory tool for doing business.
That is the exact message. As adoption scales globally across enterprise software, the sheer volume of code being processed will demand more physical accelerators.
And that leads right back to the suppliers.
Exactly. NVIDIA and Alphabet are positioned right at the foundational layer of that scaling process. They provide the raw compute power and the cloud environments necessary for Grok Build to function across thousands of enterprise clients.
Which provides a very natural transition into the hardware required to make all this work. We know that Cursor's growth has historically been constrained by limited computing power.
It has been their main bottleneck.
Right. Supporting more coding requests and running fully autonomous agents demands more processors, more networking equipment, and extremely fast data center connections.
Yes, the physical hardware.
This brings us to AMD, ticker AMD. And then on the networking side, we have Broadcom, ticker AVGO, and Arista Networks, ticker ANET.
Both stand to gain a lot here.
Both stand to gain from higher enterprise spending on the networking systems located inside these AI clusters.
The hardware layer is usually where the bottlenecks happen. When a developer types a prompt into Cursor, the AI model has to search through an enormous context window.
Right, it's not just looking at one line.
Exactly. It reads the developer's current file, but it also has to reference dozens of other files in the entire repository to ensure the suggested code integrates perfectly.
Wow.
Performing that action across millions of simultaneous users requires chips to process the math, but just as importantly, it requires the servers to communicate with each other instantaneously.
Wait, I want to clarify something here. We talk about NVIDIA processors all day, but if I am a chief information officer building a massive data center to run these models, wouldn't I just buy AMD to avoid being locked into NVIDIA's pricing ecosystem?
That's a very common thought process right now.
Can AMD actually capture that overflow demand, or are they just picking up the scraps left behind by NVIDIA?
That is the multi-billion-dollar question for the hardware sector. AMD has positioned itself very aggressively as the primary alternative.
Okay.
As companies build out infrastructure for tools like Grok Build, they absolutely want to avoid vendor lock-in. They need to keep their hardware costs competitive.
Makes sense.
So AMD can capture a portion of that overflow, especially as enterprise buyers actively seek secondary suppliers purely for negotiation leverage.
Ah, so they use AMD to get a better price from NVIDIA.
Exactly. However, you also mentioned Broadcom and Arista Networks, and that networking side is arguably a much safer play.
Why is that?
Because the networking side is less dependent on who wins the processor battle.
Okay, I follow.
Whether a data center is filled with NVIDIA graphics processing units or AMD accelerators, those individual servers still require high-speed switches and optical transceivers. Networking systems manage what we call east-west traffic.
East-west traffic. Break that down for the listener.
Sure. So in a traditional internet setup, data moves north-south.
Meaning what?
Meaning from the server out to your laptop and back again, up and down.
Right.
But when you are training or running a massive AI model like Grok Build, the servers have to talk to each other constantly to divide up the math problems.
Oh, I see.
That continuous high-volume data flow moving horizontally between servers within the same cluster is east-west traffic. It is essential for these models to function without lagging.
Let me try an analogy on you.
Go for it.
If the chips, whether it is AMD or NVIDIA, are the engine of a car producing raw horsepower, then the networking equipment from Broadcom and Arista is the transmission. It actually delivers the power to the wheels. You can have the largest engine in the world, but without a transmission that can handle the torque, the car just sits there spinning.
The transmission analogy works well, but let's make it even more accurate. It is more like having a million individual transmissions trying to shift gears simultaneously in perfect coordination.
Oh, wow.
That is what east-west traffic is. And that is why Broadcom and Arista Networks benefit regardless of which brand of engine is installed in the facility.
That brings us to the physical reality of running all this equipment, the data centers themselves. We are talking about Vertiv, ticker VRT, Eaton, ticker ETN, and Quanta Services, ticker PWR.
The builders.
Right. If SpaceX starts expanding capacity specifically to run Cursor and Grok, these suppliers stand to benefit directly from rising power density and higher data center investment.
Absolutely.
We are looking at a massive increase in heat and electricity requirements.
Yes. To understand why these physical infrastructure companies matter, you have to look at what physically happens inside the facility.
Paint the picture for us.
Well, a traditional data center rack, holding standard enterprise servers for a website or a database, might consume somewhere between 5 to 10 kilowatts of power.
Okay.
Air conditioning units blowing cold air through the aisles were perfectly adequate to cool them down.
But an AI server rack is completely different.
Entirely different. When you pack a single rack tightly with the types of accelerators required to run XAI models, that single rack can easily consume 40, 50, or even 100 kilowatts of power.
That is an enormous jump in energy density. If you try to cool that with standard air conditioning, what
It
happens?
physically fails.
Really?
Yeah, air is actually an insulator. It is terrible at transferring heat quickly at that volume.
Right.
If you just blow cold air at a 100 kilowatt rack, the components will literally melt.
Wow. Melt.
You need advanced liquid cooling systems. You need chilled water piped directly to cold plates sitting on top of the chips.
Yeah.
That is exactly what Vertiv supplies.
I remember someone using the analogy of selling pickaxes and shovels during a gold rush for these infrastructure companies, but honestly, that feels a bit cliche.
It is a bit worn out.
It seems more like trying to wire a high-speed electric bullet train system using the electrical grid of a 19th century village.
That's good.
The raw power required just shatters the old architecture.
The bullet train analogy is spot on. And that brings us to Eaton and Quanta services.
Right.
Before you can even worry about liquid cooling, you have to get the electricity into the building safely. You need heavy-duty electrical switchgear and transformers to step down the massive power from the local utility grid.
And safely distribute it.
Right, distributed to those racks without causing catastrophic electrical faults or fires. Eaton provides those electrical systems.
In Quanta.
Before any of that equipment can be turned on, you need specialized contractors to physically construct the high-voltage substations and pull the heavy cabling. Quanta Services handles the physical construction.
So it all ties together.
As AI coding platforms scale, the physical concrete footprint must scale right alongside them.
Now we need to look at the other side of the coin. The company's facing direct competitive pressure from this well-funded, newly formed entity.
And potential losers.
Exactly. We have rival AI coding platforms like Microsoft, ticker MSFT, with GitHub Copilot. We have Amazon, ticker AMZN, with QDeveloper, and Oracle, ticker ORCL, with their enterprise coding tools.
But giants.
They now face a highly capitalized competitor backed by SpaceX and XAI models. The primary risk outlined for these giants is stronger competition and downward pressure on their subscription prices.
Yes, pricing pressure is the main issue.
But I want to push back on this a bit. Will enterprise customers actually abandon established ecosystems like Microsoft or Amazon?
It's a fair question.
I mean, if my whole company runs on Microsoft Azure, I'm not ripping that out just to use Cursor.
You are absolutely right to push back on that. The reality of enterprise software is that switching costs are painfully high.
Extremely high.
If a Fortune 500 company has its entire identity management system, its cloud hosting architecture, and its developer environments integrated into the Microsoft ecosystem, pulling all of that out is a logistical nightmare.
Right. Nobody wants to do that.
So the threat to Microsoft and Amazon is rarely a sudden mass exodus of clients.
So where does the actual pain point happen for them?
The actual threat manifests in the contract renewal process.
The negotiations.
Think about the negotiation room. When a chief information officer sits down to renew a multi-million-dollar enterprise contract with Microsoft, they now have a tangible, highly capable alternative backed by SpaceX.
They have leverage.
Exactly. They can pull up the Cursor pricing model and demand steeper discounts on GitHub Copilot. They will expect more advanced features to be included in the base price rather than paying extra for premium add-ons.
Margin compression. It becomes a pure negotiation tactic for the customer, which eats directly into the software provider's profit.
Precisely. Microsoft, Amazon, and Oracle will likely have to spend far more on research and development to match the autonomous capabilities of Grok Build, while simultaneously lowering the subscription fees they charge customers to prevent those customers from churning.
Margin compression is the silent killer in the software business.
It really is.
Let's also look at the developer software companies that manage human workflows. GitLab, ticker GTLB, Atlassian, ticker TEAM, and DigitalOcean, ticker DOCN.
These are the ones really in the crosshairs.
They face pressure if AI agents begin taking over the planning, debugging, and testing phases of software development, or if larger platforms bundle coding agents directly with cloud infrastructure.
This touches on how the definition of software development is changing.
How so?
Tools provided by Atlassian, like Jira, or code repositories like GitLab, are entirely built around managing human workflows. They track human bug reports, human code reviews, and human project planning.
Lots of manual steps.
Right, a person finds a bug, creates a ticket, assigns it to a developer, The developer writes code, another human reviews it, and so on.
But if Grok Build and Cursor evolve from simple autocomplete tools into fully autonomous agents, that entire human workflow changes.
Exactly. An autonomous agent might detect a bug in the code, independently write the patch, run the test suite to ensure it works, and deploy it to production entirely on its own.
Without anyone approving a ticket.
It bypasses the ticket tracking system entirely.
It essentially removes the middleman from the software lifecycle. So what happens to the company selling the middleman software?
Well, the number of human seats required for a Jira subscription or a GitLab enterprise plan could drop. They charge per user.
Ah, per user pricing.
Yeah, so if you need fewer human developers managing tickets, you buy fewer seats. Furthermore, if cloud providers like DigitalOcean want to attract developers, they might find themselves competing against platforms that offer the cloud hosting and a top-tier AI coding agent as a single inseparable package. Right. If you do not have an agent like Grok Build to bundle with your hosting, you operate at a severe disadvantage in the market.
Which expands the scope of this pressure even further. We're moving from the software competitors directly to the human labor market itself, specifically tech consulting and outsourced development.
A final layer.
Companies like Accenture, ticker ACN, Cognizant, ticker CTSH, and EPM, ticker EPAM, could face intense pricing pressure.
Yes, they could.
Because coding agents reduce the human hours needed to build, test, and maintain software, clients may choose to complete more projects internally or demand much lower prices for outsourced work.
It makes sense from the client's perspective.
Does this automation directly threaten the traditional billable hour model for IT consulting?
It attacks the very foundation of the billable hour model. For decades, IT consulting firms have generated massive revenue by deploying large teams of junior and mid-level developers to manually write boilerplate code, run tedious quality assurance tests, and handle legacy system maintenance.
Just armies of coders.
Exactly. It was a numbers game. You bill the client for 5,000 hours of human labor.
But if you are the enterprise client and you know that an AI agent inside Cursor can generate that exact same boilerplate code in seconds, you are going to refuse to pay a consulting firm for hundreds of human hours to do the same task.
You will demand absolute transparency on how the software is being written.
Right.
If the consulting firm is using AI to speed up their own internal work, the client will demand that those cost savings are passed directly down to them. That is the exact mechanism driving this pricing pressure.
So how do the consulting firms survive? Do they just shrink?
They will argue that they provide value through high-level architecture and strategic deployment.
Which is true, they do.
They can certainly earn revenue by helping traditional non-tech businesses integrate these AI tools into their operations. But the reality is that high-level consulting requires fewer people.
The numbers change.
A team of 5 senior architects deploying AI tools is very different from a team of 50 junior developers writing code from scratch. That high-level work may not fully offset the lost revenue from the massive labor-intensive development contracts that used to keep thousands of billable employees busy.
They have to pivot toward flat fee or value-based pricing then.
Exactly. They will have to price their services based on the final delivered software rather than the time it took to build it. They will sell the outcome, not the hours.
So, synthesizing everything we have discussed today, from the $60 billion all-stock deal down to the networking cables and the billable hours, what is the core takeaway for the listener trying to navigate this landscape?
The core takeaway is that developers have become the strategic gateway into enterprise AI.
That's the crux of it.
The long-term winners in this space will be the companies that can seamlessly combine strong AI models, affordable computing power, trusted distribution channels, and the software products that developers use every single day.
It all connects.
If you control the developer's daily environment, their IDE, their coding assistant, you ultimately control the downstream spending on cloud computing, hardware processors, and physical data center infrastructure.
It is a fascinating ecosystem, and it leaves you with a lot to consider regarding the future of technology and labor.
Oh, definitely.
If AI coding agents successfully take over the planning, debugging, and testing phases of software development, what exactly will the daily routine of a human developer look like in 5 years?
That's the big question.
And will the job title software engineer even mean the same thing, or will they evolve into something more like AI managers or systems architects? It is a question worth keeping in mind as we watch this acquisition play out.
Absolutely.
This is not financial advice or buy or sell recommendations. This is purely the opinion of the author.